welcome to this weekly review of the market. As usual, I will start a bit with the fundamental calendar and see what we have for these days. And then we are going to take a special look to special levels in the market, okay? Anyway, we are in a pretty busy day because we are going to have the US GDP and inflation figures in a while, and I will be also covering that live. But I hope that with Dale. But anyway, we're going to talk in depth about that later today. But in the meantime, let's take a look at what's going on and what may happen these days, right? It was earlier today, we have some releases coming from Germany, the GDP and the IFO survey, both better than expected, showing that we have some steady growth in the number one economy of the euro area. But anyway, with inflation really low, really close to deflationary readings, the fact is that the European Central Bank, it's still in the path of extending their quantitative easing in December, right? And as long as they are planning that and keep on talking about doing more facilities over the upcoming month, right? The fact is that the chances are for the euro to remain under pressure, regardless the positive readings or the signs of growth we are seeing in Germany. Anyway, as I was saying, we have the second review of the third quarter GDP in the US in about 2 hours. Actually, it's expected to come out at 1.2%, which is pretty much the first review, and therefore should not affect really the market, should not offer, unless, of course, we have a big deviation from this 1.2. If we have, I don't know, 0.5 or 2.5, right, that could really move the market, but with a number in line with expectations and being the second review, right, we are not expecting much. Anyway, if we have a much stronger number, the dollar should rally, and if we have a worse number than this 1.2, well, the dollar may come under some pressure. But I do believe that the main reading, the one the market is waiting for, is the PCE, right, price index inflation for the third quarter. This is, as everyone knows, the favorite inflation measure for the Fed to decide whether to raise rates or not. It's not just CPI. The Fed takes a look at this. It has been slowly rising, but 1.2 is still a bit weak, still far below the 2%. So any uptick in this number should favor the green, but should fuel hopes that the Fed will rise rates next December, right? While a negative number, something below 1, should be pretty worrisome for dollar bulls, okay? Anyway, and for the rest of the weeks, there's not a lot on the dock in the deck that it's really relevant. We have some minor readings in Europe tomorrow, the personal consumption expenditures tomorrow, personal income and personal spending. In the US will also be a strong market movement along with durable good orders. Both are really relevant. I do believe that any sign of growth in the US will be seen in this particular reports, mostly will be seen as again as a chance of a Fed to rise rates in December. And while most of that rate hike has been already priced in, I believe that there's room for a bit more of a dollar strength, particularly against something, the weaker euro and the weaker yen, okay? We will talk about pound in a bit, but anyway, we have the inflation hearings in the UK today, and that hit the pound because one of the MPC members said that inflation is even worse than actually forecasted that, right? And it's telling us that the Bank of England will not raise rates during the first half of 2016, and therefore that's where today's pound weakness is coming from. Anyway, and for the rest of the week, we have inflation in Tokyo and national Japan ratings. I don't believe that they are big market movers. We all know that Japan data is not really interesting, but if the figures are really negative, that would signal some further easing from the Bank of Japan, and therefore should keep the Japanese yen under pressure, right? We are going to say about it. Anyway, And the week will end with the GDP revision of in the United Kingdom, really pretty much as the US one expected, with no really changes from the first estimate, right? And some confidence index in Europe that regardless of not moving much in the market, are really important to see how confident market or investors are in the region, right? Anyway, I will change to my charts. Give me a second. Here we are. You should be seeing my charts. I was talking about what we are seeing in pound today, and the slid towards 51. We have after the Bank of England, at the beginning of Bank of England inflation report hearings before a committee, okay, in the parliament. And overall, I was watching that this early November, right, decline, okay, we have that strong downside movement following the Bank of England in meeting and payrolls, and then we have a corrective movement up to the 61.8, and there we start plummeting again, and we have broke below the latest of Fibonacci supports, the 23.6, and that's pretty much telling me that there's a good chance that the pair may retest this low around 50.26 and even lower, right? I believe that we are heading towards 15 here. The picture in the forward charts favors, so we also falter around the 200 exponential moving average, which for me is a really huge support resistance level, depending of course on where the side of the market is, but it's telling me a lot. If I put my, okay, take a look at the chart, usually the level tends to act as a strong support of resistance, and it's not easy broken, and once it is, we have a clear trend that tends to last, right? And taking into account that the moving average has bearish inclination, that means that downside is favor and bearish moves to be below the 200 exponential moving average are much more relevant than any attempt to break higher in advance, as long as the moving average maintains its bearish low, right? One at some point pair may finally change and the moving average may go higher, but right now it's bearish. It's bearish, okay? Anyway, below 51, we have a short-term intraday support around 50.60. And if we take that level, then we are heading towards this low and even down to 150, particularly on positive ES data, okay? If we break below 150, there's room to end the week closer to the 48.90 region, 48.80, which is also strong static support for a long time ago. To the upside, right, we have some resistance around this 51.55, which is today high. I believe that the level to watch is 52 or 52.10 because the pair has here a major resistance, okay? And we need to take it out, clean it, and advance above it to deny the bearish continuation the pair is presenting right now, and maybe rally up to this 200 exponential moving average around 50 to 70. Okay, still, I don't believe that the pair can really rally if we keep on believing that the imbalance between both central banks will remain as it is with with the U.S. rising rates in December and the Bank of England delaying their rate hike for beyond the first half of 2016. Okay, and when it comes to the euro, the fact is that we are seeing a diminishing bearish momentum, right? The downside seems too heavy. The pair has fell a lot during the past 3 weeks, and now it's like it's having a hard time to extend its bearish move. But at the same time, there are no technical signs that this bearish rally it's over, it's exhausted, or it may have bottom, or the pair may change BS anytime soon. I still seeing that the market is selling at spikes. We have selling interest once the advance bid. First it was 800, then it was 700, and now here we are 650, and the market's still willing to sell on spikes. I don't know, but the ECB has been doing a lot, right, to keep the euro weak, and will probably continue to do so. December could be a huge month because Draghi has promised to extend quantitative easing. Yellen has promised to raise rates pretty much. So if we have both central banks acting in contrarian directions at the same time in the same month, okay, the pair can drop, I don't know, a good bunch of pips, maybe 300, 400 or something like that, right? So the market is kind of waiting for that, okay? Of course, as I said, most has been already pricing, but I believe that there's scope for the lower lows still, particularly if we keep on getting strong signals of economic improvement in the US. Anyway, if we have been as low as 590 lately, so I would like to see the pair breaking below that level, right? And I still believe that there's a good chance that we may retest this year lows around 460, okay? Those lows we tested earlier in here, sorry, monthly charts, March this year, 460, right? And if we lost that level, there's not much in the way until 250, to be honest. That's the next level, right? So I'm not sure if we're going to go down as 250, but 460 seems possible in the upcoming weeks. Anyway, and in the short term, movements up to 710, 750 for me are still seeing a selling opportunity. I believe that the market will try to sell if we spike towards those levels. Yeah, and on the other hand, downside seems a bit dirty right now. So I would like to see a break below 610 short term, to confirm a downward continuation towards 540 or so later on today. Okay, below that 460, of course, and maybe 250 as the next probable bearish target. And for the OC, the fact is that take a look at what's going on in here. There are more clear signs of bottoming, right? We have higher lows developing ever since bottoming around 69 in February this year. And while the bullish momentum is not yet confirmed, the fact is that the pair is trying to recover somewhere. Market has been speculating on what Reserve Bank of Australia may or may not do, but the fact is that the latest employment data in Australia was pretty much encouraging, and that diluted chances of the bank to take any negative action against its currency. Additionally, it has said that Aussie weakness has done enough for the economic recovery, exactly the contrary of what Draghi is saying these days, that right, that they need a weaker currency. Glenn Stevens, on the other hand, has said that it has been enough of weakness in the OC. Of course, whatever the central bankers said, right, it's not enough to move a currency to determine a trend, but surely helps, okay? Anyway, there's strong level around 72.40 that the pair seems unable to break these days. It's hitting immediate resistance. And with all gold being so weak, honestly, gold has been so weak, there's little chances to see a strong recovery in the OC. But of course, beyond today's bounce, right? Intraday we're bouncing in the year, but that is significant. Anyway, and back to the Aussie. If we manage to break above this 72.40 short term because of something, whatever, negative data or positive in Australia, we can go up to 73, right? That 73 region, and even to 73.60 this week. And if we close the week somewhere above 73, I do believe that there's a good chance to see a continued recovery towards 75, okay? But if we get rejected once again from 72.40, there's a good chance that the pair will return towards its next strong support, which is this 71.50, and it will take really clear break below this level to see pair back into a bearish track and towards 70.70, which is for me the lowest we can go this week, and a strong support level. Okay, okay, sorry, here. Let's go to dollar Japanese yen. Honestly, I'm hating the behavior of the dollar Japanese yen lately, because it spent much more time consolidating than actually giving the support. It's been really, really weak. It's been really weak. And if we get rejected once again from 72.40, there's a good chance that the pair will return towards 75, okay? But if we close the week somewhere above 73, I do believe that there's a good chance to see a continued recovery towards 75, okay? And if we get rejected once again from 72.40, there's a good chance that the pair will return towards 75, okay? some real active trades, right? But we have this sort of double roof and the neckline around 20 to 20. It's a 150 pips figure. So any breakup below that level should lead to a decline towards 100 to 120.70, 121. I believe that it's clearly saying that there's a good risk of bearish move in here, particularly if we have some bad news in the US. Okay, the technical picture is slightly bearish, but it's not yet confirming the move. I would like to see a break below this level, as I was saying, to confirm such negative uh, price action, okay, over the upcoming days. Still, I believe that declines down to 120, 2035 will be seen by the market as buying opportunities, right, in the longer term. So short term bearish, and we can go down to 120, 120.35, and then from there start recovering. Okay, and the immediate resistance in the short term is those highs around 2360, and I would like to really see some follow through beyond this level to call for a retest of the high around 2580. Okay, another thing that is catching my attention these days and I'm following a lot is the movement of West Texas Intermediate crude oil futures, because for most, if you take a look at daily, fact is that we have a strong bearish trend in here, and we have been lately consolidating and finding or meeting speculative buying interest around 40, right? It's like a line in the sand we have in there. Yesterday, we have an announcement from the Saudi Arabian government saying that they will do whatever it takes. Pretty much it's the same as Draghi to stabilize the market, right? That gave oil prices a bit of relief. We have a $2 bounce, yet I'm not seeing much of an upside potential in here. And I do believe that that 40 level is the key, as if we break below it, speculative interest will probably push the price much more lower, much more, 35 or so. And that will help them bring back advance against most of the major rivals also, okay? But keeping in mind that commodities are weak, and the commodity weakness is weighing on indexes also, and that is weighing on markets more and ending favoring the greenback at the end of the day, which is what I'm still seeing for the end of the year, okay? And the stronger dollar. Then with time we will see, but for now, stronger dollar it is, okay? Anyway, I do believe that's it for today. I'll see you back in a few hours, okay, with the live coverage of the GDP readings in the US. And hopefully, we will have Dale also there, okay? Thank you, and bye bye.